It's a tech-led sell-off on Wall Street as all three major averages tumble over 1%. Investors await Fed Chair Jerome Powell's testimony to the House later today. Treasury yields slipped while the dollar holds firm at 103. Stocks in the Asia-Pacific opened mixed following a weak handover from Wall Street. The Nikkei trades at the 40,000 level. Inflation in South Korea accelerates in February. The Gift Nifty is indicating a lower start for the Indian market. Oil prices trade steady at around $82 a barrel following China's pledge to boost economic growth and OPEC Plus's decision to extend output cuts. Gold shines the brightest as prices hit record highs led by mounting U.S. rate cut bets. Bitcoin scales a new record level, hits levels of 69,200 but quickly retreats. RBI imposes strict restrictions on JM Financial, bars the company from financing against shares and debentures, including initial public offerings, says credit underwriting was perfunctory, and also finds serious concerns on governance issues. And Antfin Singapore Holdings is likely to sell 2% stake via a block deal in Zomato today, while promoter Sumitomo Wiring may sell 4.4% stake in Samvardhana Motherson. Good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we're tracking for you this morning. There's a lot to talk about, but the handover as far as global markets go has definitely not been so positive today. We saw pretty severe cuts coming in across the U.S. And on the back of that, you have Asia, which is trading pretty mixed right now. So what's seeing the biggest cut this morning is the Nikkei market that is down around 80 points. It has, recovered to back above 40,000 levels right now. It's at 40,020. But remember, that's also a market that even considering the cut today is still up around 4% for the week. So I wouldn't be too worried about that. There are some more markets in the red, for instance, the Taiwanese index, but it's not too much lower, just around 25 odd points over there. Kospi also trading just around 16 points in the red right now. What's holding up? You have the Hang Seng markets, which are absolutely flat right now. So, not too much of a move seen there. Straits is seeing a 25-point kind of gain right now. So very, very mixed as far as the Asian markets go. The Shanghai market, by the way, has also just dipped into the red. Remember, there's a lot. This week is very important because we are still hoping to hear something from the government in terms of a stimulus. But right now, it's trading very flat. The implied open for our own markets will come up, and it is indicating that we might get a little bit of a lower start. Around 28 points lower is where we're at on the Gift Nifty. That's what's happening across Asia. But let's also talk about the US now, because like I was mentioning, we saw pretty big cuts come through across the US market. So stocks fell for the second session yesterday as all major tech giants such as Apple pulled the broader market off from the recent record high. So the Dow Jones, if you look at it on your screen, was down 1%, 400 points gone over there. The tech-heavy Nasdaq slipped 1.65%. So that was the one where the biggest cut came through. And the S&P 500 also dipped over 1%. Now, the U.S. Treasury yields also slipped after the latest economic data came through, and that signaled easing price inflation. In terms of stock-specific action, I was mentioning that a lot of the tech stocks were under pressure. Apple slumped nearly 3% on the back of a report from Counterpoint Research, stating that iPhone sales fell in China around 24% during the first 6 weeks of the year. So on the back of that, the stock was down around 3.5%. There were some other major tech stocks such as Netflix, Microsoft. They also lost around 3% each. In fact, Tesla for the second day has lost 4% as well on the back of weak China sales. Remember, the day before also Tesla suffered quite a big slump in the trading session. Now, the company's production unit in Berlin was also shut down after a suspected arson attack. So that's what's going on across the U.S. market in terms of both the indices and some of the big stocks. But let's also bring you some important opinion. This comes in from Anastasia Amoroso, the chief investment strategist at iCapital, who spoke about the fall that we've seen in some of these big tech giants and what kind of impact and bearing it could really have on the overall IT sector. Listen in.
The Nasdaq was massively overbought. From a technical standpoint, it was very much stretched to the upside. So it makes sense that there's some consolidation there, and everybody has been massively long tech. So that to me makes sense as a broader tech sector development. What I don't think makes sense is Apple and Tesla being significant for what's likely to happen with the rest of the tech sector. And if I look at those two stocks in particular, there are idiosyncratic catalysts. There's weaker sales in China, in the case of Apple, and there's weaker shipments out of China in the case of Tesla. But when I look outside of that, and if you go to the other stocks within the big tech sector, you look at the artificial intelligence trade, and to me that is so alive and well. I think what the markets are starting to do is differentiate within the big tech, and that's a healthy development.
All right, that is all of the global action as well as opinion that we are tracking. But let's now talk about what all of this could really mean for our own markets. We have our team here with the trade setup. Mangalam, Sudarshan and Hormaz are all in to fill us in. Guys, a very good morning to all of you. Hormaz, let me come to you first. Take us through what we should track in terms of the cues today.
The cues today, it all relies on NBFCs, right? It's going to be the day of NBFCs, as has been the case yesterday as well. But on terms of the market itself, the Nifty was lower yesterday, but the market has been range bound over the last 3 days, as has been the case every time we see a big single day jump and then we see a bit of consolidation. But the range for the Nifty has been widening over the last 3 sessions. It was a 50 points in that truncated Saturday session, 80 points on Monday, around 150 points yesterday. The Nifty ended lower yesterday, but despite that, the institutional flows were robust in the cash market. The FIIs were buyers of around 500 crores. DIIs were buyers of around 2,000 crores rupees. But that is also because of a slew of block deals that we saw in stocks like Aavas Financiers. And that trend of block deals is likely to continue today as well with stocks like Zomato and Samvardhana Motherson. But in terms of the financials, as I was mentioning, the NBFCs will keep the sentiment in check. The Bank Nifty, which ended higher yesterday, it only has HDFC Bank and SBI to thank for that. The Nifty Bank was up 100%, but 100 points. But the NBFC pack, IIFL Finance was down 20% in a lower circuit yesterday. It's going to be JM Financial today. IIFL has been downgraded as well, so we keep an eye out on that one. The outperforming sector within the banking space is the PSU banks. The PSU bank index is up 7% in the last 5 trading sessions, so we'll keep an eye out on that one as well. What has happened? The broader markets continue to remain under pressure, although the mid-cap index has not cooled off as much from the record highs. The small-cap index, though, is down 5% from the peak that it has had. And NBFCs, as I mentioned, along with that, hospitals and IT remain under pressure. And US market, the handover from Wall Street is weak, and the Gift Nifty is indicating a slightly weaker start for our markets today.
All right, Hormaz, thanks for taking us through all of those cues. It's over to Sudarshan now, who's tracking all of the stock-specific action. Sudarshan, like Hormaz was pointing out, today is once again going to be a lot about the NBFCs.
Morning, Pavitra. Another day, another RBI action after IIFL Fin. It's JM Fin today. RBI has barred JM Financial from doing any form of financing against shares and debentures. Also, company cannot sanction loans against IPO of shares, but can continue to service its existing loan accounts through usual collection and recovery process. And this action was necessitated due to certain serious deficiencies that RBI found during its inspection. Zomato, sources say Antfin Singapore Holdings likely to sell 2% stake via block deals and offer sizes of more than rupees 2,800 crore, and price is at a discount of 3.9% to CMP. Samvardhana Motherson, sources say promoter Sumitomo Wiring to sell 4.4% stake via block deals, and floor price is at rupees 118 per share, which is 6% discount to CMP, and deal size is of $427 million. Torrent Pharma, US FDA has issued establishment inspection report for Gujarat's oral oncology manufacturing facility. EIR indicates closure of the inspection. NHPC has started work on 1200 megawatt Jalaun ultra renewable energy power park in Uttar Pradesh. Coal India, Gevra mine gets environmental clearance to expand production capacity to 70 million tons per year. Havells India to expand its existing product portfolio with the introduction of kitchen appliances, and company expects to launch this category of products by May 2024. India Boost Real Estate, MIDC has asked company to vacate 512 hectares of a plot in Nashik in a month, and company will be filing an appeal against this order before appropriate courts or tribunal. REC board to consider interim dividend on March 16. AB Fashion Caladium Investment exercises its right to convert warrants into equity shares.
Okay, Sudarshan, thanks a lot for taking us through all of that action. We're going to watch for all of these stocks in today's trading session. Finally, it's over to Mangalam, who's looking at cues from the futures and options space. Mangalam, it's also the Nifty Bank expiry today.
It is a Wednesday, Nifty Bank weekly options expiry. This after yesterday, which had the Nifty financial expiry. But just keep an eye on the indices. You know, while the range is widening, as Hormaz pointed out, the point is that it's still in a range itself, 22,150 to around 22,500. And yesterday, while it was lower by about 50 odd points, this is the mid-cap index, which was also down by about 1/3%. The important part, for the second day running, we had the advance decline ratio a lot more in the favor of decliners than in the favor of advancers itself. Financial services. Yesterday was the expiry, so towards the last hour, there was a fair amount of volatility that played out. From the mild green that we saw sometime in the middle of the day, it ended closer to the lower end of yesterday's trading range. On account of a lot of bulk deals, etc., we did see both the FIs and DIIs buy in the cash market. But despite that, if you just take a look at the Nifty futures premium, the March futures premium for the month started with a premium of over 100 points and now has come gradually lower to around 77 points, telling you that the FIs continue to sell this market. And yesterday as well, they sold about 1,400 crores in index futures. And in that, they added about 14,000 shorts and unwound around 450 longs. So as a result of which, one day where the FI long exposure inched higher to 38%, and the next day it's back to 35%, the same mark where it started the series itself. On the way up, 22,350 call for the Nifty has been fairly active, telling you that there is resistance around 22,450 to 22,500, and at the same time support around 22,100 to 22,150. Nifty Bank weekly options expiry plays out today, and to that extent, it will be very important to watch out for both HDFC Bank and SBI, the stocks that accounted for most of the gains on the Nifty Bank yesterday. But there are a lot of shorts in the NBFC space, namely RBL Bank and Bajaj Finance. So those are a bunch of stocks that I'll be watching out for.
All right, Mangalam, thanks a lot for that. We will watch for all of those names. But with that, we're going to get into our first short break on the show. When we return, like we told you, the RBI has barred JM Financial from financing against shares and debentures. So all of the details coming up on the other side. Hey guys, welcome back. You're still tuned in to Power Breakfast. Now, like we told you, the Reserve Bank has barred JM Financial products from financing against shares and debentures with immediate effect. Now, this will include sanctioning and disbursing loans against IPO shares as well. The RBI says it also found some serious concerns on governance issues. So, Ritu is here with the details. Ritu, take us through the RBI order and what is the kind of implications that it could have?
Well, after IIFL Finance, you now have the regulator imposing similar business restrictions on JM Financial products, which is a systemically important non-deposit taking NBFC. RBI has directed them to cease and desist with immediate effect from doing any form of financing against shares and debentures, including sanction and dispersal of loans against IPO of shares, as well as against subscription to debentures. The company can continue to service the existing loan accounts through the usual collection and recovery process. Now, RBI said it carried out a limited review of the books of the company on the basis of information provided by SEBI, and it found some serious deficiencies in respect of loans that were sanctioned by the company for IPO financing as well as for NCD subscriptions. It found that the NBFC repeatedly helped a group of its customers to bid for various IPOs and NCD offerings by using loaned funds. The credit underwriting was found to be perfunctory and the financing was done against meager margins. The application for subscription, the demat accounts and the bank accounts were all operated by the company using a power of attorney and a master agreement obtained from the customers without their involvement whatsoever in subsequent operations. So in a sense, you had JM Financial Products effectively acting as both the lender as well as the borrower. They also acted as the arranger of the bank account opening as well as operator of these bank accounts using the same power of attorney. Now, besides these, RBI has also pointed out to serious concerns on governance issues in the company, which are detrimental to the interest of customers, it said, and RBI is examining any regulatory violations and deficiencies on this particular aspect separately. Now, as in the case of IIFL Finance, RBI has said it is going to review these restrictions as well after a special audit is completed, and RBI is satisfied that the deficiencies have been rectified by the company.
Okay, Ritu, thanks a lot for filling us in with all of these details. In fact, in response to RBI's order, JM Financial's co-head and MD Ashu Madan said that there have been no material deficiencies in loan sanctioning process and that they will fully cooperate with the RBI for the special audit. So that is where things stand right now. We'll, of course, keep bringing you anything more that does develop on this story. But moving on to another important piece, tech giant Google has agreed to reinstate apps that were removed for billing fee violations. And this comes after Union IT and Telecom Minister Ashwini Vaishnav held meetings with both Google and the impacted startups. In a statement, Google said it is temporarily reinstating the apps while asserting its right to implement and enforce its business model in India. The dispute centers around Google's revised service fee structure. Earlier, Google used to charge app developers anywhere between 15 to 30% for every in-app purchase made by customers. And after a wrap from India's Competition Commission, Google had revised this fee to somewhere in the range of 11 to 26%. The case is now in the Supreme Court, and Google has removed some of the apps from the Play Store after the Apex Court refused to provide interim relief to startups. Listen in to what the Minister Ashwini Vaishnav had to say on this matter.
Google and startup community both have met with us. We have had very constructive discussions, and finally Google has agreed to list all the apps as on the way the status which was there on Friday morning. That status will be restored. Google has been supporting our technology development journey, and we believe that in the coming months both startup community as well as Google would be able to come to a long-term resolution.
All right, that is the word on Google reinstating all of these apps. Remember, the likes of Naukri, 99 Acres by InfoEdge, all of these had been removed temporarily. But with that, we're going to get into a short break. On the other side, we're going to bring you all of the cues from the commodity markets. Stay tuned, we'll be back in 2. Welcome back. You're still tuned into Power Breakfast. Let's talk about the commodities now. So Manisha joins us for a quick update. Manisha, good morning. What are you tracking today?
Well, I'll start with the crude oil prices, Pavitra, because we seem to be slipping further away from those 4-month highs that we saw in the previous week itself. So while previous week was 3.5% of gains, this week is 1% down already. The OPEC and allies production cut extension is no surprise. They have maintained those numbers. There are concerns over China achieving economic growth. And then the markets also are expecting a rise in the U.S. crude inventories for a 6th straight week, and that's weighing onto the markets. One area that continues to glitter, though, is the precious metal prices. You have silver still trading around 7-week highs, and the gold prices are holding around record highs above $2,100 an ounce. There is support from geopolitics, financial market uncertainty, all of that is supportive. The physical demand, of course, seems to have slipped a bit because of the sudden price rise. But the latest reports from Citi says that $2,300 an ounce is what they are anticipating by the end of this year. A UBS report puts the number to $2,250 an ounce by the end of this year as well. So very strong bullish statements coming in from the Wall Street banks and brokerages. Gold, they say, is going to be the flavor for the second half of this year.
All right, Manisha, I thought you were going to tell us about Bitcoin because it's at 69,000, but I'll save that for later in the day. Thanks for joining us with that quick check on some of these commodities. With that, we're completely out of time on this edition of Power Breakfast. Thank you for tuning in. We have Bazaar on the other side.